Hello, folks, and welcome back to another edition of Money in Motion. Today is Monday, August 28th, almost at the end of the month here, wrapping up one of the most dreaded months of the year in general for trading, although I'd say September is not that much better, but starting things off bright and optimistic here today. So we are green, though. Things are bouncing back quite a bit from the lows. Monte?
Yeah, I think we're
what's going on?
Not much. Hope you had a good weekend, my friend, and hello to everyone in the chat. Hope you all had a good weekend as well. I think already just looking at this morning's price action, I think we're setting up for an interesting week. And let's dive right into it. I want to talk about a couple charts, and then I'll hand it back to you. I'll be quick because I know there's definitely some COT data that is worth covering, but just looking at today's market from a broad overview, from a bird's eye perspective, let's take a look. See, the S&P started the day off strong, right? Pulling back a little bit here. If we look at what it looks like on the 15-minute chart, you can see we gapped up to about the 44.32 level, reached as high as about 44.40 before promptly being rejected. This is a critical level that was established during the middle of the week last week. That's where we got rejected from today. It looks like it may mark the interim high, although I wouldn't be surprised to see what we typically see when we get this sort of price action, where it reverses, comes back down, fills the gap, touches the level where where the gap fills, and then comes back up and basically closes the day break even. I think that's a very plausible scenario for today for ES, and is something I'm watching closely. But again, getting back to that bird's eye view, let's take an overhead look at some of the other indices. NASDAQ. Now, this is interesting to me because obviously NASDAQ, a bit more risky. You have tech stocks and whatnot. So this one is underperforming relative to the S&P. That is, traditional sign of risk off price action. And we have some big names looking somewhat weak today. Microsoft, Apple, Amazon. None of those charts look very good. So we have that, but then you have the Russell, which looks very strong. So these are basically, like, if I had to put it into crypto terms for you, the NASDAQ or the IWM would essentially be Bitcoin. And
crypto terms, I can't wait to hear this.
The IWM would be like Bitcoin because it's the safe haven, right? It's the least volatile of all of the indices traditionally. And then you have the S&P, which would be like Ethereum. And then you have the NASDAQ, which is like altcoins. But I do think, just looking at it from this perspective, and then also looking at like the TNX is down today, but it looks like it may flip green. A lot of signs of potential risk off price action. But that's not atypical of a Monday, CJ, which is something we've talked about many, many times. I got some more to cover, but I want to pass it back to you before I ramble on for too long.
Yeah, let's talk about what we're seeing in terms of COT, because things have been very interesting.
Yeah, I'm curious to see how traders are gonna trade this week and how they're positioned coming into it. Wow, platinum.
Yeah, I screwed that one up by closing it on Friday, but what are you gonna do? Still a good trade. But yeah, that's the power of getting those short squeezes. And that was one thing that I wrote about in the weekly report. It's like that was one of the signs that was really favorable earlier last week. It was outperforming like S&P all of the metals, really everything other than like palladium today, but it, is outperforming. I will go back to gold because gold, I'm actually going to not hate on gold for like the first time in over a year. So it's going to be fun. All right, let's start with ES. Still in the zero position, or like we're looking at this from a short bias. A lot of commercial selling at the top. This is like the 6th week in a row that retail has been consecutively long. And what worries me about this the most is that retail continues to buy this dip with like little success. And the same, well, I guess the same was not true for large speculators. They got a little less short, or they got a little bit more short. NASDAQ, long, kind of conflicting signals. But if you combine all of this data, you'll see that retail bought this dip more than they've bought any other dip in the past, which doesn't necessarily mean they have to be wrong. There's periods of time where even the best fades are right. However, it is kind of concerning to see that from a bullish perspective. Like I wanted to see a little bit more shorting. I wanted people to get a little bit more macro bearish.
That's a pretty decent amount of retail shorts. I mean retail longs.
Yeah, they keep buying.
Yeah.
So, they actually got it right after COVID, though. Leading up to COVID, retail was kind of wrong, but after COVID, they actually bought the dip, whereas a lot of large speculators were shorting. But anyways, let's get to some of the interesting stuff. I mentioned, NASDAQ has the first COT setup in terms of a short setup all year. Same thing with ES. Something that hit my attention yesterday that we got in the COT report is gold is now at 100 on the COT report for 2 consecutive weeks in a row. We've had the commercial movement index go to like a 40 level. So we're starting to see accumulation of this, which is kind of a risk off signal in certain instances. I think it's like when you have these COT positioning, like with gold being bullish and equities being bearish, I think that's like very strong potential. Like if we have risk off price action, it's going to hit hard. So it's kind of a cautionary flag. But as you can see, commercials are getting longer ever since like this recent kind of, ever since they've been scaling in. So maybe we get some type of an inflection point. And if I'm trying to play, a risk asset to the upside, gold might be the one. Because platinum, there's still a lot of shorts. Like even though it had a great week last week, it's only at 96 now. So it hasn't been a whole lot of shorts that have covered, but probably just not going to chase at this point. I made some mistakes last week, so I'm just going to honestly just wait. No need to force anything right now. Plus, like if the equity market comes up and makes like a higher low, it could still be an interesting place to short. Or excuse me, a lower high. But then if we break out to new all-time highs, like that's an easy breakout long too. So I think, I'd rather wait for a little bit more clarity in terms of like taking positions on the NASDAQ and ES. I'd rather like to see a break of maybe some of these lows, or it's in the middle of the range. It's tough. And I was really strongly considering shorting it last night because of all the news failures we've had basically last week. Nvidia was a huge one in my mind. The fact that we were actually bearish and price closed, I think it was up 10 basis points to end the day after opening, at an all-time high of like 517 in the post market,
Yeah.
And closing down, like that is a pretty significant news failure in my mind.
Absolutely.
So let's talk about trend following. I like to do trend following in non-crowded markets. Sugar is an example of that now. Also, I think that when a lot of people look at this chart inherently, they think that since sugar is up, 100% year over year. Wait, what is it? Not 100% year over year, but it's up at least 20% year over year, which is a lot. It's been a very, very positive year. So people are going to try to short this because they expect mean reversion. And while mean reversion may come in the long run, in the short run, you could still get these very strong short squeezes. So like here was a nice instance of a short signal that COT got you into. And then once again, we didn't get to, I guess we did get a long signal back here, like near the recent lows. So that's kind of what we're getting right now. We've seen commercial accumulation all throughout this level, which isn't really characteristic if you think about how much sugar is up this year. So maybe this is the continuation of the commodity super cycle. Maybe this is a long trade that I enter, and maybe we go into new highs over the next coming month or two. So, I'm always looking to do trend following in non-crowded markets, and maybe sugar is one this week. We'll have to watch that. But other than that, I guess we should talk about the dollar and just cover it briefly.
Yeah, it dipped a bit, but looks like it's coming back strong today at a very critical level right now. What do you make of it?
Oh man, dollar's just a beast.
Yeah, this is a point I was going to make. I may as well make it now while you have the chart up. I think dollar above that level there of about like 104.1. You can see where we got rejected basically at the start of June. Those highs there, we break above that. I think you need to consider the fact that perhaps we are entering a more secular bearish trend,
Dollar
and that
bull market.
dollar bull market. And you know historically that's something that wouldn't necessarily be good for risk on price action in the equity markets. But that being said, we have seen um sometimes them both move in the same direction. But I think in this instance, given what we're seeing from the IWM, given what we're seeing from the NASDAQ, given what we're seeing from ES, I think dollar above 104.1 into that 105 range means you don't want to be really long anything. That being said, I do have one possible long that I kind of like, that I'll talk about in a minute. But what do you make of the dollar here, CJ?
I think it looks strong, and I also think nobody really wants to buy it. And a lot of times you'll get the question like, what levels are you looking at, or where do you think price could go from here? And I think in this particular case with the dollar, it's not so much about the levels. While they do matter in the short term, you will usually find short term resistance and support. In the long term, I think it has more to do with positioning. So, based on this rally, it could take a while for us to get back. Like, let's look where we were previously. We didn't really top that much until speculators like started to get long, and they're really not long. They're still really, really short. Let's look at this on the 3-day. So they're not even really that close to neutral levels yet. So I think this is something that could definitely be watched. Like if you look at the position, you say, okay, we still have this many shorts in the market after this much of a move, then we could probably continue to go up. But it's hard to pick like a specific level, I think. Last thing I was going to talk about was coffee, but that was Mike Davis. You still long? What are you long, man?
I think he posted that when you were talking about platinum. So
Somebody got it. See, that's the whole point of the show. Do it, learn the process, and then do it better than me. That's what this is all about.
yeah, it's not hard to do it better than him. It's not. No, I'm kidding. I'm kidding. But no, good for you,
These are
Mike.
simple concepts.
No, it does make me really happy. Hey, calm down. My dog's going crazy down there. Calm down. I mean, it is great to see, even if, we don't make money on the trades, whenever you guys in the chat like drop, what you're in, and that's great that you're still in that platinum trade. I think that's a really strong looking chart. So, good stuff, Mike, and nice trading there. Now, one thing I wanted to talk about, CJ, that I think is it's calling my name. It's tempting me. It's just,
That's never good.
yeah, I know, right? It's like a siren calling Odysseus. Um, it's not good. I should probably just plug my ears. But I don't know.
You remember I think Nassim Taleb actually uses that analogy when he's talking about trading and fooled by randomness.
Does he?
Maybe it's a different.
I'm not sure. I'm not sure. I remember that, but
Make your point. Sorry to interrupt. Go ahead.
no. that's how I feel about this. Like, this is calling my name. And let me tell you why. Okay, first of all, let's start with the fact that we have some clearly defined risk. I think anything below the wick that was set on Friday, you get out of this. It's that simple. But I think the upside potential and the speed at which it can do so might surprise a lot of people. If this market goes back risk on, I think Riot will be one of the faster moving stocks in this market. So I think we could see Riot move back up towards previous highs. I'm not saying it's going to reach, $20, but plausibly about, like, into the $15 range, or right where I have this level marked out here, about 14.42. That's where we got rejected in the past. I could see us, kind of establishing a range here. And the reason why I think that we could see risk on price action in Riot is, one, simply it's been beat down so bad. Decrease in bearish volume. That's a leading indicator for price action. And also we had, this bearish engulfing candle. It didn't really come to fruition, but today we're actually seeing, some outperformance in a day that otherwise, a lot of stocks are looking weak. Even things like, Microsoft or Apple aren't looking great, although they are turning a bit on the day and looking a little bit more green, and less bearish than they were about 15 minutes ago. But nonetheless, Riot is one that I think is looking interesting. But what I will say is, do not just go out and buy naked calls and be like, oh, this thing's going to, Monte said it's going to 1450. I'm buying naked calls. Don't do that, because let me explain why. It very plausibly could consolidate at this level for quite some time. It moves when Bitcoin, it does move when Bitcoin moves, and it just makes higher beta moves. And if we look at Bitcoin right now, you might think, oh, Monte, what are you talking about? Bitcoin's due for a move. It's consolidated for a week straight. That's nothing. That's child's play. Bitcoin can consolidate for months, right? And look at the Bollinger Bands. They're so widely diverged. Although they are starting to converge in what I have dubbed the Lucas. Gosh, I know you didn't, because you're a very smart man and you wouldn't do that. So, I'm not too worried about it. But do not do that, please, people. Just it's never good. If you want to buy options, I'm more than happy to help you set up a more risk appropriate strategy. But I don't think buying naked calls is the case here, because look at how widely diverged the Bollinger Bands are still, right? That means we could plausibly see continuation for quite some time. Like, note here, after a big move to the upside, we saw nearly, what is this? Like a month of bearish to neutral price action before we actually got a big move to the downside again. And I think that's definitely a similar scenario here. We have comparable Bollinger Band price or Bollinger Band movements, and I think that could result in comparable Bitcoin price action. So if you just go out and buy naked calls, yeah, you're gonna lose, even if Riot trades sideways, because Theta is just gonna absolutely eat you alive. But what I would recommend is buying spot, cutting it below this level of defined risk, which I have marked at about exactly $10. I would move it down a little below $10 to about $9.90. That's where I'd cut my losses. And then, with an upside target of about 14.5, I think that's a pretty good risk reward ratio. And I think it might take a while to play out, but it is something that I could see, happening within the next week to 2 weeks. So,
Monte, I'd like to ask you a question about a couple other assets related to the miners, because we often cover Riot and Mara and Coin, but I think it might have been Adam who's been asking specifically about Bit Farms, and what was the other green miner? Something Source or something?
Yeah, any Sphere
Sphere.
3D.
Yeah, I mean, it seems like those are obviously even higher beta to bigger miners. But hash power is at an all-time high. There's a lot of miners trying to be really, really competitive in this industry. So do you think it's worth just taking a look at those as well now
Yeah,
that
sure
we're on
thing.
the subject? Because I know we do have some people who like those.
Yeah. Yeah, and the thing is like we were talking about any last week and how if it dips below $1.50, you got to be careful, and we're in that range, right? We're in the range of, be careful, because this is levels where, we in the last, like, basically 6-7 months, we haven't dipped below the $1.75 level, but um finally broke down. That being said, like you said earlier, this is almost like a higher beta version of the miners. And if they do flip green, um, and we see Coinbase or Riot make a move up to that 14.5 level, then I think any makes a strong move towards the $3 level. The comparable level for any with the Riot local highs would be about 250. I could see that being hit, but the problem is, and I checked this out this morning, actually, I'm glad you brought this up, because I was looking at some options in any, maybe just like to put on maybe an iron condor, just if it consolidates, but there's just not a lot of liquidity in this right now. To be frank, there's just not a whole lot of liquidity, and you can see it represented in the volume as well. Like, yeah, even on Friday, like, no one bought this thing. There was very, very low volume on all major platforms, and getting an options contract filled was actually very difficult. So, um, with any, I'm I'm worried about more downside price action just based on a general lack of liquidity. And the thesis for a lot of the upside in the other assets is short squeezes. And if you don't have the liquidity, then you can't have the short squeeze. So this one could plausibly continue to grind lower. And I don't see a catalyst other than Bitcoin going up for any. And really, you could say the same thing about Bitfarms. Um, Although today it is looking more like Riot or Mara. It is much bigger than any in terms of hash power. I think about triple the size of any. Regardless, similar things, right? Like, similar thing to Riot in the sense that it has this decreasing bearish volume that's kind of calling my name from a technical perspective. And I do think that when the time comes, this will be a fast moving stock to the upside. And honestly, it'll be probably less crowded than Riot and Mara, because that's what everyone on the main street will be trading. All the people who follow Kathy Wood and ARK, or watch CNBC will likely be buying Riot and Mara and not be buying BITF. And I think that makes it even better, because that lessens the chance for a squeeze. I think flying under the radar, this thing could plausibly make a move back up to the all-time highs, if we see a positive move in Bitcoin. But again, all of this is contingent on what we see in Bitcoin. And like I said, I think we could see consolidation for plausibly a week to another 2 weeks. And by consolidation, I mean like a range around price action within like a $2,000 range. So
Yeah, last two things I want to share, and then we'll wrap the show up. Unless you have anything else. But yeah, in terms of the COT report, we did see some interesting price action or positioning action in Bitcoin, specifically with, let's go to the 3-day or weekly. Like, such a strong shift in terms of the futures markets. So commercials got like mega short last week, really out of nowhere. But I thought that was very interesting. It's tough because I don't think the futures market, like the CME, is a huge part of the Bitcoin market collectively. So it's not, it gets hard to gauge. So I don't really know how to interpret it yet, but just wanted to draw that to your attention because I do think it's notable. And there are some very interesting signs. Like here, you saw retail get really, really long right at the top. From a relative basis, that was pretty insane. I wasn't looking at this data at the time, but I think it might be valuable in the next cycle, and I'm trying to learn how it could potentially be interpreted, but it's still difficult, I think. Last thing is coffee. I might have to go try to get long that today or later in the week because it's starting to break up. Good defined risk behind Friday's low. 100. Retail still a little bit long, which is my only hesitation. But that's one I'm going to be looking at now that I've probably left.
You can definitely see
behind.
it. Yeah, you can see a decrease in retail longs, though, which is a bit encouraging. We saw a similar thing last time it spiked there. We had retail longs, and they got a little bit less in the market, a little bit less, and then they flipped negative, and then bang, price shot up. So I think, at the very least, you're seeing a kind of lightening up of the retail longs here in coffee.
Yeah, you've kind of seen an inverse correlation. I'm not going to bring it up because we don't need to go into it, like Hershey's and Coke and McDonald's and all those other stocks that will just go for fun. But it is interesting. I think you see like a slight inverse correlation between the coffee futures chart and Starbucks's stock price. So I don't know if any of you guys have that in like your long-term retirement portfolio or whatever, but it might be a nice little analysis or interesting thing to look into. Not really any actionable. It's weird. You'll find these correlations in weird places. Like
they're everywhere.
Like that makes sense, but you'd be surprised. Like New Zealand dollar has a correlation with the price of milk or like milk futures because that's their largest. They've got the cows, that's their thing. And you wouldn't think of it, right? You wouldn't think of it. So strength of Australian dollars correlated to their milk products. So
yeah,
just like Canada and their oil, CAD, USD, and crude. So
yeah, and that's really what it's all about, is finding these correlations and then using them to make profit. And you might find them in the strangest of places sometimes, even the New Zealand dollar and milk. But more obvious ones like Nvidia and Taiwan Semiconductor and things like that. So you always got to be looking out for those relationships, because really at the end of the day, that's what it's all about. But
my favorite one, this will be the last one.
Okay.
Is like when kids were making green slime, that was like a big thing in the.
Oh, I remember. I was obsessed.
Like late 2000s. I think we were kids on that time. But
yeah, we were. That was our glory days.
Yeah, all downhill from here. But anyways, yeah, everyone was making slime. And there was one trader, I think it was one of the Market Wizards books, but he had a sentiment indicator that like caught it on social media because everybody was talking about this slime. So he went out and bought the company that owns Elmer's. I forgot what it's called. Anyways, but he was the only one who picked up on it. No one on the street is, in touch with what suburban moms are doing and buying with their kids. So
yeah, the main ingredient was glue. So he just basically got long glue and made millions. But hey, noticing those trends and noticing those correlations is what it's all about, and it can make all the difference. So,
well, thanks for watching.
Yeah, thank you everyone for watching. Lots of great comments. Appreciate everyone participating in chat. You guys are the best. Love you all very much. And don't forget, check out tradethechain.com for a 14-day free trial. You can try it absolutely free for 14 days. You get access to the sentiment dashboard where you can take a look at what people think about certain coins. It's the first thing I look at every morning when I wake up. And then also you get access to our Discord, which is a community of traders from all around the world. Very bright minds like Mr. Lucas Bradley, who, he didn't actually buy naked calls. People don't believe him. Don't believe him. He knows better than that. But lots of bright people in our Discord, and you get access to that. And CJ and I, and also Nick, share our trade insights. So you definitely want to head there and check that out. But also, please don't forget to like and subscribe. It helps out the YouTube channel a lot. But that's all we got for today. Thank you so much for watching. We'll see you again tomorrow. Take care.